What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome to What's Making Headlines, your weekly wrap-up of all the big stories happening in the mortgage and finance space. My name is Ben Squires. I'm the commercial content writer at The Advisor, and I'll be hosting this week's show. Now today, we don't have Annie again this week. She's still on leave, and Will is up in Queensland at COG Aggregation's annual conference. So I'm sure he's having a good time up there. But we do have a guest, so it's not just me. So our listeners won't be suffering this week. You might have seen her reporting on some of our real estate titles at Momentum Media, and she's also the host of the First Property Buyer podcast, which is a really good podcast you should listen to as well. So a big advisor welcome to our co-host today, Emilie Lauer from Real Estate Business and SPI.
Yeah, thank you so much for having me.
How are you going?
Yeah, pretty good. Glad to be back on What's Making Headline. It's my third appearance with you guys now.
Yeah, we did a collaboration show ages ago, and then we did that other one with Annie not too long ago. So yeah, we're old hands at this.
So, really happy to be back. Thanks for having me.
Yeah, and the alternative is me just looking down the camera and reading the news out too. So it's probably a bit easier listen, I think, this week. So yeah, no, thanks so much for coming on.
Fantastic. Well, let's go.
Yeah, absolutely. So there's been heaps happening in the world of mortgage and finance and property that would be good to share with our listeners. And one of the big stories that came out this week was new data from Cotality talking about house prices and how much, I think, perhaps unsurprising in a way, but it's just interesting to see the scale of how far house prices have gone up. So the number of $1 million suburbs or $1 million sort of markets has now kind of surged to record levels according to new Cotality data, which kind of shows it's surged 143% since 2018, which is massive.
Yeah, it is. I think it is. Look, I kind of want to say it's expected, and at the same time, it's surprising. Yeah. You expect more suburbs to enter that $1 million club because house prices and dwelling prices in general have increased by a lot over the last 12 months or so, or even before that. But you would think that having $1 million house was like an exclusive type of things before, and now like 1 in 3 suburbs have $1 million market. So everybody's a millionaire, basically.
Essentially, if you're lucky enough to own a property, 1 in 3 people now have that equity. But it's just been interesting to see sort of the trend. And Cotality takes this data from analysis of more than 4,000 house markets nationwide, including 3,500 house markets and 1,300 unit markets. And it's kind of shown median property values have risen roughly 46.8% nationally, or about 270,000. Currently 41.9% of house suburbs and 13.5% of unit suburbs have median house values above $1 million. And I think the really interesting thing from this latest data set is seeing the expansion beyond the sort of traditional prestige suburbs. It's kind of suburbs on the outer rim and those outer markets as well. Yeah,
well, it's, there's no more opportunities to buy in those prestigious markets for 1 million anyway.
Yeah, exactly.
So those prestigious one is like the $5 million club, or I mean, I'm exaggerating, but at least 3.5 minimum. Yeah. So, if people are priced out of this area with the 1 million, like the 1 million is going, towards the fringes anyway. So, and by the moment you've got a couple of dwellings entering that $1 million mark in one suburbs, it drives the rest of the suburbs and the surrounding suburbs as well. Yeah. So you just need maybe 1, 2, 3 dwellings, and then you're done basically. Look, I think we're gonna go and see the $1 million mark going further away from those prestigious areas, and it's going to become the new norm, unfortunately.
Yeah, it's tough, particularly, and we'll probably touch on this a little bit later, but particularly for segments at the lower end of the market, like first home buyers and people who don't have any equity behind them, it's just probably going to be an expectation you might have to move a little bit further out of town or save extra or just get used to having to pay $1 million for a house.
Well, I think, you're definitely going to have to review the location. And location is always key when you're actually like buying in any type of markets, whether you're buying in a lower end or even a higher end of markets. Where you buy is going to play on how much gross you're going to have on that dwellings.
Yeah.
And the rental aspect, if you were to go into an investing perspective, or even how much mortgage you're going to have to pay, depending on the price you're going to pay for the property.
Yeah, and it's interesting, like brokers will have sort of a role to play in this when they're sort of dealing with clients who are struggling to figure out what their best move is. I was talking to Matt Turner, the managing broker at GSC Finance Solutions from Geelong, and he said like the education piece is vital when brokers are sort of talking to their clients. You just sort of saying they need to understand the ramifications of spending that little bit more for the perfect home versus spending less now and potentially paying to upgrade later. He also said he's increasingly referring to buyer's agents for those that have the budget so they can find the right property potentially off market. So yeah, there's all sorts of routes, I think.
Yeah, I'm always like very cautious when we talk about that right property style. Like everybody is talking about the right property because it does make or break a portfolio. So if you go like, look, if you that first property is either going backwards or not growing as much as you wanted it, yes, of course it does put a halt on how much portfolio growth you're going to have in a couple of years. But how do you know that it's the right property? That's always, tricky for me, especially because I think it depends on individual needs and individual wants and goals. So the right property for you, for example, is not going to be the right property for me or for, Will that is not here. But
no, exactly, 100%. And I mean, personally, I have decision paralysis when trying to figure out a TV show to watch. So I think, trying to figure out the property is...
That's why you need like a good team behind you.
Exactly. And it's all about that sort of finding a broker, finding, places where you can sort of...
Yeah, buy. And that's what makes a good broker also as well. And if your broker takes the time to educate you and really tailor their advice to, your strategy, your wants, your needs, I think that's what makes a good broker.
Yeah, 100%.
Talking about analysis paralysis, we did a great podcast on the first property buyer show on that. So, Ben, that's your next listen.
Well, definitely, as I said before, for our listeners, it's definitely worth tuning in to first property buyer.
Yeah, especially because like a lot of broker will have to deal with a lot of first home buyers at the moment. So send them our way.
And you're talking to a lot of people who've sort of had clients who've been on that journey and that kind of thing.
So we talk to broker, we talk to financial planners, we talk to BAs, we talk to investors, we talk to first home buyers. We analyze the market. So we basically streamline the whole education process for first home buyers to, have a better understanding. And I think, even for professionals, it's good for them to have a refresher because it's very easy to just assume that people know. When you start your property journey, you don't know anything. And it's very hard to get your head around.
Yeah, and the wrong decision can be a very expensive mistake as well.
Yes. Do not buy new. Do not listen to me. Like I can't give you an advice.
Yes, that's not proper financial advice, we should say. But it was interesting to see the data, and I think it's not hugely surprising. I'd say it's definitely worth keeping an eye on, and particularly for this markets on the suburban fringes and that kind of thing. And you get the sense that prices seem to be only going in one way for the time being, at least.
Yeah. Now I think what's worth also noting is like not every city is having the same growth as well. So you still have like those pockets of affordabilities, for either investors or first-time buyers or even downsizers. So there's still opportunities to make a really good purchase for a reasonable price at the moment in Australia. So not everything is around the $1 million mark in every cities, but you need to know where to invest. So just check the data, check your suburbs, and definitely talk to your professional team around you to help you make that decision.
Perfect. So yeah, lots to unpack there. We're going to take a quick break right now, but when we get back, we're going to be looking at first home buyers and what they've been doing in the market. We'll be right back after this message. Welcome back to the show. So first home buyers are probably one of the segments that's sort of most impacted by housing affordability and housing accessibility issues. And we've seen some interesting data come out regarding just how busy they've been in the first half of this year. So interestingly, fresh data from money.com.au revealed that first home buyer lending flatlined in the first half of 2025, rising just 0.2% nationwide, which is well below sort of the record levels we saw during the pandemic property boom. However, there are a couple of states that bucked the trend. Queensland and Victoria both recorded gains of 4.5% and 3.5% respectively, with Victoria accounting for 1/3 of all first home buyer loans, with total loans up 4.6% year on year. So I think that sort of speaks to what we were saying before. I guess, you do have the broader trend, but you kind of have to dive into the individual markets as well to get a better sense of what's happening.
I think this one is interesting. My own perspective, I think people were looking and waiting for the 5% scheme and for the RBA rate cuts. So we've been like hearing the cuts were coming and the scheme was coming. Technically, it should have come in January. So many first home buyers have been waiting for those to come into place before buying. I'm not sure that was the right, I think as a first time buyer, I think, entering the market sooner rather than later when there's more competition and demand is something to think about. But that's I think one of the reasons why it's been flattening a little bit. And Victoria, not surprising at all. Ever since, the extra taxes on investors were put by the states, investors have fled the markets. And it's been replaced by first-time buyers, owner-occupier. So rental is a bit crazy over there.
100%. But it's one of the themes we always come back to, I guess, when we talk about property. The right time to buy is as soon as you can.
Look, the right time to buy was yesterday.
The right time to buy was in 20
years ago, 2020.
100%. But yeah, it is tricky. It's hard. It'd be hard out there for a first-time buyer, I'd say.
Look, I think yes and no. So I think, yes, it's hard for anybody that is a first-home buyer to enter the property market, but it's doable. But I think, what we're hearing is a lot of people being very negative about, you'll never be able to, afford a house or afford, a property, in your lifetime. That's not true. I think if you are smart with your money and savvy, you can 100% buy something while maintaining your lifestyle. I think it's doable, and I think you need to be data orientated, run the diagnosis, account for a buffer, and make sure you are in line with what you can afford, and then you can buy. Look, take me for an example. My current, me and my fiance, we just bought our first property. And that's why we did the first property buyer show also as well, because we had plenty of questions. But we just bought our first apartment. It's a unit. It's in a strata block, which usually is not recommended, but it works for us. Our mortgage ends up being $70 more than what we were paying on rent per week. The next rent cycle upgrade, we would have had that extra $70 anyway. So my mortgage cost me the same that I would be renting. So why not putting that money towards myself?
100%.
So I think there is that very negative impact of younger people have it tough. They cannot buy anymore. It's never going to be possible. I'm sorry, it is possible, but you need to be sure to run through those calculations. You need to choose what's right for you, and you also need to be a little bit savvy with your money. So it's true that you gotta have to make sacrifice, but you don't want to sacrifice everything. You still want to maintain your lifestyle, and that's where things are becoming tricky for the first new home buyers. Is there is a consensus that you've got to sacrifice everything, and that's no, your own life is going to be as a renter. No, it's not true. Like, look for what works for you, I think.
Yeah, and 100%. And it's also that, as you were saying, that being informed piece, I think, where, the more you know, the more sort of options you can explore. And, I think a lot of first home buyers would be surprised about sort of the options that are there. And there's all the schemes now, like there's the expanded first home guarantee scheme. So,
this one is a bit, the 5% scheme, I'm a bit on the fence with that one.
Yeah.
I think it definitely gives the opportunity to enter the market faster.
Yeah.
But I still want to remind people that 5% deposit is 95% mortgage.
Yes.
Plus interest.
Yes. Yeah.
So you gotta be like very mindful about what you're taking and not go. Again, you don't want to lose your lifestyle. Like you don't want to be a slave to your mortgage.
Yeah. Well, yeah. And pretty much locks you down to working for the next few decades, but.
Yeah, but your whole life you're gonna have to be working anyway.
Exactly.
So
yeah,
unless you win the lottery, you do
true.
have to work. Or unless you're like, like one of, what is it, a trust fund baby?
Yeah.
Yeah.
I wish. It's probably too late to go back and become that. But yeah, just like, what is my retirement age going to be?
Don't even start on this.
Not worth thinking about.
Not worth thinking
Definitely
about.
Not worth thinking about.
We're still too young for that, Ben. Like we're still gonna have like another 3 decades ahead for us. Yeah.
Yeah. Well, there's been plenty going on for first home buyers. We're going to take one more quick break right now, but when we get back, we're going to be looking at some new data regarding mortgage stress. So we'll be right back after this message. All right, welcome back to the show. So Roy Morgan, the research body, released its latest cut of mortgage stress data, which kind of showed some encouraging signs in a way, depending on how you look at it. According to Roy Morgan data, mortgage stress is at its lowest level since early 2023, with just over a quarter, or 25.9% of Australian mortgages considered to be at risk in the 3 months to September 2025, which is a 2% drop from August 2025. It is important to sort of, look at the long-term context of this. Despite the recent fall, over 500,000 more Australians are at risk compared to May 2022, when the RBA sort of began its rate hiking cycle. And around 16.3% of mortgages, which is roughly around 858,000 people, are classified as extremely at risk, which is kind of in line with the two-decade average. So Roy Morgan considers a mortgager to be at risk of mortgage stress if they are paying more than a certain proportion of their after-tax household income towards their home loan, and they're considered to be extremely at risk if even the interest-only payments exceed that proportion of the household income. And it's kind of drawn from their single source survey, which is conducted annually with over 60,000 Australians. But super interesting data. And I chatted with a broker to sort of think about what brokers can do within all this and how they can sort of support their clients. And I talked to George Massaridis, founder and CEO of Mortgage Navigators in Sydney. And he said they can really sort of play a vital role in easing mortgage stress by, engaging early, reviewing their clients' finances, and just negotiating better deals with lenders. So, I guess it's encouraging to see mortgage stress dip slightly, but it is something to keep an eye on. And I guess if you look at the larger trend, it is sort of heightened since the RBA have been hiking.
I think it's a tough one. I think. What do you consider mortgage stress? Is it because, you're going to think about your mortgage? Like, is that something that's going to play? Because by the moment you have a mortgage, you're thinking about it,
Yes, yeah.
Every time I get my pay, the first thing I do is pay my mortgage.
Yeah.
You know what I mean?
Yeah.
Like, I want to make sure this is paid first.
Yes, yeah.
And then I deal with the rest, But I think it definitely is encouraging that it's dropping a little bit. I'm wondering, though, how it's going to be that data next year with the 5% scheme happening. What's your take
plus
on that?
what the RBA decides to do in the next few meetings as well.
It's coming up soon,
Which is coming up first week of November, which is not very long away at all. I'm not too sure what's going to happen. I think I'm leaning towards hold, but
what's the big bank? What have they been saying? Like, what's the take on it? Because at one stage, you had like everybody was predicting cuts in November, but that was like a couple of months ago, before we had unemployment data. What's their take at the moment?
I think they've been a little bit more sort of less certain about something happening in November. And I guess it's a bit of a movable feast because the data always changes as well. But I don't think that they think it's a lock for sure. Although they did have I think we reported on this. It's far from a foregone conclusion. And
look, nobody has a crystal ball, unfortunately.
Yeah, exactly.
But yeah, I think that would be surprising for them to cut. I don't know.
Yeah.
It's just like, I think it's a 50-50% game at that stage. Like, it's either you get the cuts or you don't get the cuts. But I think it's also a great opportunity for, brokers and other, like people within the industry to remember that buyers, when they take a loan, that they shouldn't count on those cuts because you never know.
Yeah, exactly. It's like all those people who took mortgages after that classic thing that happened during COVID where Philip Lowe said it wasn't going to rise for a certain amount of years. Which is like, there's no guarantee.
How many cuts, how many hikes did we get? 13 now?
Yeah, a few. But anyway.
I'm glad I didn't have a mortgage at that time.
Yes, that would have been a stressful time to have a mortgage. Well, Emily...
is there any way to ease mortgage stress that brokers have been talking about?
Mazarides was just saying sort of proactively approaching lenders and, seeing if there's anything they can do, if borrowers can do to sort of adjust their repayments or refinance them to better rates and that kind of thing. So all sorts of little tinkering you could do, I think. That's something for our brokers to keep in mind as well.
Great.
Perfect. Well, Emily, thank you so much for joining me to run through some of the big stories in property and mortgages this week. If people want to see more of your work or listen to your podcast, what's the best way to do it?
So we are on Apple and Spotify and on YouTube also. Look for the First Property Buyer Show. We are also running SPI Smart Property Investment for more seasoned investors. And we also run the Real Estate Business Podcast for property professionals. So just check us out, like, honestly. And we're all across the property titles as well. So very, very related to brokers.
Yeah, absolutely. Thanks so much for coming on the show.
No, thanks for having me. Always a pleasure to be here with you and with the advisor team. Yeah,
absolutely. And to our listeners, if you enjoyed that, make sure you read all the stories, get all the details, and if there's anything you think we should be talking about that we didn't, or if you have any questions, feel free to reach out at editor@theadvisor.com.au. Otherwise, we hope you have a fantastic weekend, and make sure you catch us next week for another episode of What's Making Headlines.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.